Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
This is the weather report from GAC, last week's credit union confab in Washington, D.C. On the show to report on key developments overheard at GAC is Sarah Snell Cooke, former editor-in-chief and publisher of Credit Union Times and now a consultant to credit unions. The big question at GAC was, is this really the end of the credit union federal tax exemption? Will it really be the end? Keep listening. Also on the agenda was, what's the impact of staff reduction a la DOGE on NCUA? Can the regulator adequately perform with significantly reduced staff? Which leads to the really big question, will NCUA be merged into another agency? As for that last point, Cooke's firmly held opinion is that were NCUA to be merged into another agency, that would spell the end of credit unions as we know them. The end of credit unions. That's a gloomy prognosis, but Cooke explains on the show why she believes it. On the show, too, she predicts that demolition of NCUA won't happen. Not now. Listen up. So now, NCUA, you just were at GAC. Was NCUA a topic of conversation there?
What was really interesting to me, there were more closed to the press sessions this year than I've ever seen. And one of them was about the lobbying strategy. The biggest topic that we heard from the stage, what I would say is the tax exemption. But in the regulatory session, they absolutely talked about independent regulator. But it was a breakout session. I mean, and I wasn't there the whole time for Nussel's speech or any of the congressmen, which again, there were like a lot fewer, it seemed like, congressmen there, or Congress people there, than I've seen in the past for sure. The big one was don't tax my credit union, which I will go off on that too.
CUNA always played that tune.
They always have. And NAFQ, it was...
And it was absurd because it was actually never at risk until now.
I was going to say, it was one time I thought it was a little more serious than the rest. But yeah, until this year, no, absolutely not. And I think the way they get to that is through NCUA's loss of independence. And I've been writing about this for 20 years. I think I would say at least 15 years ago, I was writing about this. If you lose a tax exemption, you lose NCUA, you lose a purpose for a credit union.
You see, what I've heard is that this is all volatile, as I'm sure you understand. What I heard was that the tax exemption probably isn't going to happen. I mean, it's not going to be taken away. NCUA is a whole different can of worms. It's much more peril in today's Washington.
You know, if NCUA were merged in with the bank regulators, because if it loses its independence, because one, there's this power play amid the chaos in DC, we're going to lose the agency as an independent regulator. And I know we might have differing views on this, but if you're losing an independent regulator and you're talking about creating greater efficiency, which is what DOGE is all about, and has been tearing through DC. It's been a little interesting, different feeling, just different vibe in general in DC at the GAC this week. If you're talking about efficiency, you're going to absolutely logically, theoretically make sense to merge those banking regulators together and treat them all the same. And that means there will be no difference in the regulation and charter of credit unions. And if that's the case, then it's a backdoor to removing the tax exemption, to requiring CRA, all the things that everybody was fired up about at the GAC. And I think a lot of the problem is they have not found the right message. Don't tax my credit union. You want to go to Washington and immediately start saying, don't do this? Why are we not all year long, just as loudly, going up there with the positive messages? We don't have a consistent or a relevant brand message of anything to push for. We're not advocating anything. We're saying don't take this away. One of the stories, for example, that we should be sharing. Navy Federal, largest credit union in the world. I know for the longest time, I had a banking lobbyist tell me, because I was DC reporter for 8-9 years of credit union reporting at the Times and otherwise. I had an ABA lobbyist tell me, we don't touch Navy Federal because they are so into their members, and so into serving their members. So it's not, but yet the message is, oh, it's all the large ones. They're bad. And, I just, when I was at GAC last week, I interviewed Lee Brady, who is the CEO at CQ in North Carolina, second largest credit union at least in the United States, if not in the world. And Dwayne Naylor, who's the CEO at Local Government Federal Credit Union. And I don't know if you know that backstory, but like CQ birthed local government way 42 years.
I know Jim Blaine. I still talk to Jim Blaine.
But in addition to local government, local government spun off Civic Federal Credit Union. CQ also still does runs the back office for 2 other credit unions. They started Latino Credit Union. And so CQ has started credit unions to reach an additional 550,000 members. This one credit union, by collaborating, it does them no profitability purpose like you would look for at a bank. And they're doing it because you cooperate among cooperatives. And it is good for credit unions, and is also good for their members that need specialized lending. For example, Civic was focused on mostly fire engine lending and firehouse lending. And it's just, things like that we really need credit unions for. Right. And they're also up in arms about the credit unions buying banks, which is another
about 10 times. Okay.
Yes.
Whoa.
I know.
This happens every time I wake up. I look at the New York Times and another bank's been bought by a credit union. Yes. And as I always say to people, as I always say to people, and why do you think the banker sold? Because he was offered more money by a credit union. And
it's a free market.
These guys are in this for profit.
And I talked to a lawyer who does a lot of these. And so part of the exam process is that they want to look at what will happen to CRA obligations if this bank is merged into this credit union. He just said every single credit union has met or exceeded CRA requirements. Every single one. So, not only does this completely annihilate the argument that credit unions buying banks is bad, but it also annihilates the argument that credit unions really need CRA because they aren't serving their members. Of course, we have bad actors. Everybody does. But by and large, credit unions are still very much tied to their mission and their vision, just like CQ, just like Navy Federal, just like these credit unions are doing the work that nobody else will. And these are the stories we need to be telling, because as I tell my clients, your story is a culmination of all your client stories.
Now, here's the problem, though. It's not necessarily clear that if you wipe out the regulator, you wipe out credit unions. And with this DOGE nonsense, the DC Chainsaw Massacre should have a movie coming out any time. It's saving money seems to be the driving force right now.
Absolutely. Yep.
And you have Todd Harper saying, well, he's talking about the staff reductions and not even consolidation of agencies. Harper said pretty plainly, if the staff is reduced, the effectiveness of the supervision will decline. There will be more credit union failures. We'll have to increase the share insurance rates, blah, blah, blah. Now, Hauptman, I listened to him on Mike Lawson's show just this week. He really didn't say much of anything other than that there will be staff reductions. And
what can he say? He serves at the pleasure of the president.
So nonetheless, no one's saying there's not going to be staff reductions. And if there is, then NCUA will be less effective than it is now. Therefore, why not merge 3 ailing bank regulators into one?
I would go back to, do you really going to think they're having a separate set of regulations for credit unions? That is not financially nor regulatorily efficient. I would assume there would be one regulator left. and one set of rules for everybody. That would be my assumption of what would happen.
Now, if you're into cost cutting, that'd be the only way to go.
Well, and look, they're taking they're taking an axe to everything. There is no scalpeling here, as we've seen. One more regulatory agency that doesn't even technically have to follow Trump, President Trump's positions or EOs or anything, executive orders. Why would he allow them to survive? I think hopefully some of the pushback in the courts is going to work out. Yeah, they're expecting cuts in staff, significant cuts in staff. And so,
there can be cuts in staff. There's no question about that. The question, I think, is, can DOGE order a cut in staff? And the answer seems to be no. But that doesn't mean it can't be a cut in staff. So,
right. I mean, Hoffman, again, serves at the pleasure of the president, even if he is an independent agency. He was nominated by the Trump administration.
Right.
So
Trump actually has issued some sort of comment saying that DOGE isn't firing people; it's the head of the agencies that's firing people.
Yeah, because
which I obviously this was dictated by a lawyer who said, we just got to be clear about this. Blah blah blah.
Yeah. While I like Todd Harper a lot. I think he's a very nice guy. I differ with him on policy a lot, but I do not at all disagree with what he said about credit unions possibly failing more, not getting examined as often as they need to be. I think, if they really need to focus on some of the worst or the troubled credit unions, the 4s and 5s, if they need to put their focus there, then they may have to take their eyes off of some of the 3s that may end up hitting a 4 or 5. So I think it would accelerate the mergers. And there again, one more reason not to have an independent agency or a separate agency, even if it's not independent.
Are you optimistic that NCUA can survive this blizzard?
I'm hopeful that, yes, I am hopeful that it is possible there will be enough pushback on what is on the S-storm that is going on in DC. And I don't care what political position you take. It's chaos. I mean, there's just no two ways about that.
To me, what's really bizarre about this is the firing is essentially random. You might remember, maybe you're too young, Jack Welch, when he was CEO of General Electric, initiated a program where he was, every year they fired, I forget the percentage.
Bottom 10%.
Yeah, it was like every year. But at least that was, and we could say that was heartless, but at least it was logical.
Right.
Here it's like, oh, you're a new employee, we can legally still fire you. You're gone, dude. You could be like a rocket scientist.
Yeah, exactly.
You could be the smartest guy on the planet, the smartest woman on the planet. You're gone. And you're working 18 hours a day. You're gone. It's like, this makes no sense.
Is it any different than Twitter?
No, it's not. And I think Twitter gave us, yes, the handbook for that. But it's so totally, I think the firing is just insane. But I do wonder, though, we're not really hearing from the lobbyists a coherent argument about why NCUA needs to be preserved. They have a lot of arguments about the tax exemption, which, as far as I can tell, really isn't on the table right now. Although it could be, in reconciliation, all kinds of hell can break loose. So all it takes is like 2 lines, and there goes the tax exemption in a 1,000-page document.
Right. Yeah. Yeah. It is definitely on the chopping block there. And it used to come up. It came up every year. It was always in the budgetary considerations, and it never happened. It was just like a thing that happened every year, like Christmas or anti-Christmas. And back to your point about the independent regulator too, I think you and I know the uniqueness of credit union structure, what they do, and why they're able to do it is because they get this 21 basis point savings that they put back into their communities as, lower loan rates, higher savings rates, lower or financial education programs, whatever it is, that they decide is of value for their members to put it toward. Removing the independent regulator, who understands their uniqueness like we do would also mean that we've talked to bankers. They don't know credit unions. Hell, people on the Hill, the members of Congress on the Hill, reporters, you see mainstream reporters reporting on credit unions, and you can tell they don't have a clue what a credit union is and how it's different. And not just, fluffy stuff, but real numbers, dollars and cents returned back to the American communities. And so having a regulator that understands their uniqueness is critical. Otherwise, we're going to end up with the exact same rules, which as banks, we could reach the secondary markets, we could do more business lending. There are a lot of things we could do with the authorities that banks have, but then we're no different than, we eventually become no different than banks. So I think and which means we would be taxed. So, which takes away all that 21 basis points that we do all our good work with. So I really think it's critical to maintain NCUA as the credit unions regulator.
A point to ponder is Kirk Kortaleski told me, and Kirk's a smart guy, that if credit unions lost their tax exemption, he believed that the biggest credit unions, for instance, Navy Federal, would demutualize. And USAA did that generations ago, where it was a mutual, not a credit union, but it was a cooperative, and they demutualized. It's a pretty straightforward process. Mm-hmm. And his point was there'd be nothing in it for Navy Federal to be a credit union if it's going to be taxed.
Yeah, that is certainly a significant business decision to ponder.
So if all the big guys leave, we'll just be left with the shoebox credit unions, which everybody wants to close anyway. So.
Exactly. And no purpose of having a separate independent regulator because there's not enough assets to matter. They aren't systemically important.
And I do think Kirk's right that if I were at Navy Federal, that would certainly be on the board agenda to discuss if they lost the tax exemption. It'd be irresponsible not to discuss demutualizing.
Yeah. And there was a period a while back. Oh God, I have no idea how long ago, probably 20 years ago, where credit unions were converting to banks.
Right.
And a lot of them, and it's part of why NCUA at least used to, I don't know if they still do, have it on their website, the difference between the rates at credit unions, the rates at credit unions that converted to banks and banks. And some of those credit unions that converted did not do well, they weren't at all ready to perform in a for-profit market. Now it's a different time. We had a lot of CEOs who had always been in credit unions versus now where we have some bankers that have come in and might be able to better handle that. But there were credit unions that CEOs end up getting fired after they convert.
End of the day, are you optimistic that there will be an independent NCUA agency?
I would say yes, because I can't see a world without credit unions, and I 100% believe that if they are merged in together, it would be, if not a death by 1,000 cuts of the credit union business model. So yes, I am hopeful because I can't not be.
You could be, right. I remember the reason Kortaleski said the thing about the big credit unions demutualizing was I said to him, hey, Kirk, 95% of credit unions, the tax exemption doesn't mean a damn thing to. Mm-hmm. And he said, you're right. But what would happen is the big guys would leave if they weren't tax exempt.
Exactly.
And he said they'd have to come up with an entirely different business model to compete. And if they're going to do that, they might as well demutualize, just go into a whole different business. Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey. Again, that's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.